Yo, okay. Um, Welcome, guys, to tonight's session, to tonight's class, and you know, continuation on the lessons of the market business model. So far, we've been learning, we've been studying, and the goal of our study of our classes is just one thing, right? To at the end of the day become profitable, right? So all the knowledge we have been gathering, we're trying to put them into good use at the end of the day, right? So far we've been learning about the market business model, how price works and everything. And currently we've been speaking a lot about I think I was able in our last class I was able to finalize the teachings on understanding swings properly and helping you have add more confidence to your entry models for reversals. Now in tonight's class we'll be going deeper, right? Remember that we are still on this anchor candle issue. And in our last class, I was speaking about inversion, right? So we were ready to start to go into inversion, into learning inversion properly. Like we're going into inversion proper, but I just had to, show you guys one or two things on the chart before we proceed to, proper learning of inversion, which we are going to go into today. Now, one of the things that will challenge you as an upcoming trader uh, is most time not analysis, right? Most time it will be uh, trading itself. What I'm trying to explain to you is that sometimes you might see that price wants to start selling from here, and you'll be right because eventually price will sell. But unfortunately, you might not be in that move. Unfortunately, you might not be in this sell move. And in fact, it can be as worst as probably you have taken your entry somewhere around here or anywhere, and then price took you out, hit your S stop loss before delivering in your favor. So this is one of the challenges that traders are going to experience. And this is why I always hammer on the fact that analysis and trading are two different things, right? The Because of your analysis is asking you to do something does not mean you just jump into it hook, line, and sinker. When you are trading, you think like a trader, you think like a negotiator. You are looking at stuff that you are looking at the best possible position that you can take that will give you money. That's your focus. Profit is your end goal as a trader. You don't care about entry, about if you were looking for snipe entry and the snipe is not coming, you let it go. You look for The point is that you're looking for something that will benefit you at the end of the day. Traders negotiate. If the reason why you are entering a trade is just because of it has done certain things, most times you would fail. There should be room for negotiation and there should be contingencies. But unfortunately, this class is not a trading class. This is an analysis class. So I'm teaching you guys how to analyze, how to understand how price moves, and how you can use them to make profit. But the trading aspect of it is where most of you would be having one or two issues, and I get it because um, tons and tons and thousands of informations out there about trading are exclusively uh, all about analysis, right? So you see everybody just teaching analysis, analysis, and analysis because I mean that's basically very easy thing to do. But trading this thing in a live environment is where the problem now comes for most of these people. You understand? So what I want to do to you for you guys is I'm working on something that would allow me to host a specifically like 100% trading class or trading yeah, not trading class, because I don't want to call it a trading class, because basically it's not a class, although you will learn, but it's more like saying a yeah, a guidance kind of thing, right? Exactly. So that at the end of the day, when you're done learning the market business model, whatever I've taught you, then you will know how to trade with it. There is difference. You can learn something, then you must know how to trade with that thing. Analysis is a tool that you use to trade, right? So if you have the tool, but you don't know how to use the tool, you're not going to make money. And this is the reason why many traders, despite learning different concepts, and they can tell you with precision, okay, price is going to do this, market is going to do this one will do this one will do that. They don't know how to now use this thing to make money. And what is the benefit of a skill that you have that is not even putting a dime in your pocket? Exactly. So it's going to be paid, right? Of course, it's not going to be free, because trading, like I said, is one thing that is very in fact, I don't think that it exists, right? So I'm not going to just throw it cheaply to the public. Right? I'm not going to throw it cheaply to the public. You want to know how to trade with what you're learning, you have to learn it, because, like I said, trading and analysis are two different things. When you're done with learning how to analyze and you know how to analyze very well, then you must learn how to trade, because that is how you learn money management, position sizing, portfolio, and a lot of things. And what's it called now? Iceberg orders, and so many other things that you must use to, make money with what you have learned. So I just decided to give you guys a hint as to what is coming, so that those of you who are willing would start preparing ahead, right? It's not for everybody, it's only for the market business model traders, right? It's only for those who are trading the MBM. And it will also give you time to have, communication with me, where you can ask questions and so many other things that you want to, that have been bothering you or have been giving you issues so far. Okay, so if you need more information on this, hopefully this week I will drop more information on my Twitter. Yeah, so just check the link on my bio. You see the link, check those links on my bio there, on this my YouTube bio. You'll see the link to my Twitter account, yeah, to my Twitter page. So you can just join there and just give me a follow and relax until I give more information on the next step, right? So let's proceed. Let's start from where we stopped, right? So I think we're already done with helping you understand that there's nothing like trend, right? In MBM, we don't believe in trend. What we believe in is price. And that's what we follow. We stick 100% with price, right? Now, and then I was able to also teach you guys that in every move, right? In when you see in every bearish move, right? When you see price selling, for price to move from a high price to a lower price, we must see series of what swing highs. So this is a swing high here, another swing high, swing high, swing high, swing high, swing high, swing high. So you see price selling, and then for price to be bullish, we must see series of swing lows. So you see swing lows, swing lows. So swing lows that are above each other. So the rule is simple. For price to move from a lower price to a higher price, there must be multiple swing highs above each other. For price to move from a higher price to a lower price, there must be multiple swing highs above and below each other. But unfortunately, we would see that, for example, if we reference this move, right? Price started selling from this high and stopped at this low, right? Exactly. But the issue with that move there is that now the issue with the move now is that um, the issue with the move is that as there is a swing high here, so there is a swing low here, and then swing high, then a swing low, then a swing high, a swing low, a swing high. So how do we know which exactly? How do we know that this is going to be a wholesale move, and that these all pullbacks here, these all pullbacks of correction, as you would call it here, are so how can we know that they are just pullback, that they are not reversals? Because if we now look at this one here, we can say, okay, this one is a reversal, right? Exactly. Let's look at it here. So this one here is a little bit of reversal, even though price is still selling. But the point is, it's a big reversal here. So it's different from what we have in this small move here. But for most traders, they would think this is the reversal. And then when they are supposed to be looking for reversal here, they are now looking for continuity. For where they were supposed to be looking for reversal here, they will assume that it is pullback. So all of these things will now make the trader to become scared and not have confidence in trading, and even the analysis becomes a whack. You understand? So basically, and this is where inversions come in the market business model. So you must start writing now. Inversions, INVERSIONS, inversions. Now there are two types. So the use of inversion is 100% price based. So inversions tell us the direction of price. That is the work of inversion. You want to know if price is going to sell, use inversion. You want to know if price is going to buy, use inversion. So those are the inversion does not give you entry, it only gives you direction. I have taught you guys entry, one of the entry model we use in MBM, right? VTA and VTB. That's all. There are more, but that's what I'm willing to give to you guys. Now, always pay attention in class so that you do not go and be using the wrong tool for the wrong job. I have taught you guys that a carpenter that wants to make a certain furniture must use the proper tool for him to be able to get the right furniture, right? Exactly. So you want to know where price wants to go. Okay, from this high now, how can we know that price will sell? In fact, from the moment this low here, formed, how can we know that? What we will expect is that a sell is going to happen, and that sell will even come and clear this low and go as far as coming to this low. How can we tell what price wants to do, where it wants to go? How can we know these things? That is where inversion comes in. So we're going to start going to the inversion. Is definitely not difficult. It's not difficult at all. If you have been following the classes I've been teaching you guys so far, trust me, you will know that inversion is not difficult, right? So we're going to proceed. I'm going to hide this now because I won't be needing them. I won't be needing it. Exactly. So now we have a blank page, and on this page, that is where we're going to do most of our work. So get seated, guys. Don't need all of this again. Now, let's talk. Let's learn. You see, before price, I've taught you guys how price is created. I've taught you guys how liquidity, volume, and volatility. And then I've taught you, which is the last one I teach you now. I've taught you guys the last one I taught you just now, right? Why price does not pull back. The reason why price does not, the reason why price continues, right? And that thing you call pullback here to price, it is just a continuous move. Price does not know if it's a pullback, right? Price is just moving. So I've taught you that price is continuous, right? And then I've taught you that now those pullback is just graphical representation of what price is doing, right? So now how can we know these pullbacks? How can we know this move? How can we know in case there is a reversal? How can we know a reversal? Exactly. So that thing that I've taught you so far in the past 2 videos, we are now coming to cement it here with inversion. I hope you guys get what I'm saying now. In fact, we are also going to be talking about volume, liquidity, and the rest, right? How you can see them on the through inversions, right? So although not like the A grade level, because that would also be reserved, but with this you'll be able to make your money from the market, right? Because that's the end goal. You want to make money. Okay. Yeah. So now let's proceed, guys. So when price moves from a point, from this point to this point, let's imagine from this price to this price. Price, we would say it is bullish, right? Or it has created higher price. That's basically why it is bullish. And here now you would print a bullish candle, a green candle, right? And in the market business model, we don't care about candle. We can practically use the same candles for everything, the same color. When we start trading, right? For those of you who will join my trading, you will see basically I do not separate my candles, right? I just use the same candles. Sometimes I switch between them. Now, you see this move from this side. Please, I teach. I am a teacher. This is the thing you guys need to understand about me. I love to teach the reason behind something more than just show you that thing. Now, if my classes is sounding a little bit exaggerated or extensive, I don't know. It's on you, right? I just hope that you can persevere and go through all of this so that at the end of the day you become a profitable trader and you'll be able to make money on your own. My personality does not allow me to just show you that, okay, this is this. No, I must explain the foundational understanding behind that thing. And if it's going to take me 2, 3, if it's going to take me 100 videos to explain the foundation for that thing, I'm going to do that. At least that way, you yourself now have complete knowledge, total knowledge in itself, a knowledge that is untampered, unfiltered, right? Knowledge that you can use so that by the end of the day, when you have a problem, because look, this is YouTube, right? Most of you will never be in my mentorship because I don't do public mentorship, right? So most of you will never have the chance to have a one-on-one, chance to gist with me, ask your questions and all those kind of things. I hope you get what I'm trying to say. So, so that is the reason why I'm taking my time to explain all of these things. I'm not trying to sound fancy or anything. I'm explaining this because I understand your disadvantages. When you watch these videos on YouTube, there is no marks anywhere for you to ask question and say, boss, I don't understand this one. I don't understand this one. Your best way now is to practice this thing in front of the screen. But if you don't understand them, then how do you practice? How do you refine? How do you improve? How do you grow? So this is basically, I am considering you, and that is the reason why I am taking my time to explain things and using analogies where necessary. So don't get tired. In fact, you should add more oil to your lamp and fire on, because we are getting to the end of the class, and it is usually at the end of the class that most of the tips, most of the advices, and a lot of things are going to come in. Okay? So hold on. Right? Hold on. Don't be a coward. Good. We're together, right? Now let's proceed. So we see that when price moves from a point to another point, a lower point to a higher point, it is bullish. There is an increment in price. And what happens there means that buyers and bidders were aggressive. That's basically so we do not look at this as just price moving. We're seeing bidders being aggressive. And bidders being aggressive, it means when I say bidders are aggressive, it means they were buying into the liquidity that were provided by the askers. When I say askers are aggressive, it means they were selling into the liquidity that were provided by the bidders. And I've explained liquidities in this market to you guys that there are orders. Guys, go and watch these videos and write notes, please. Good. And then you now see a sell move. Now, you see this sell move here. We don't know if it's going to go down, 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 down. We don't know if it's going to stop here and then continue up. We don't know if it's going to stop here and then, just a little bit move and then continue. We don't know what it's going to do. In fact, the only thing we see is that price is going up. We don't know if it's even going to start selling at this point, or it will wait till it gets to this price point, or if it will not even reach all of this point, it will just get to this point and start dropping. We don't know those things. But in MBM, we don't need to know. Yes, we only use what we have to understand what is to come. And we have a 90% chance of being correct. Exactly. So we're going to add everything I've taught you guys so far, and we're going to build an understanding around them. I hope you guys get what I'm saying. So I'm trying to help you understand inversions. So when you see price being bidders being aggressive, and we don't know what's going to happen next, what is the smart thing to do? You wait. Smart person waits. So when you wait, you now relax, and then you now see that, okay, price stopped here. Now you have seen that, okay, the first thing is that bidders were aggressive, and then askers became aggressive a little bit, but they couldn't outweigh the bidders, and the bidders became even more aggressive. Now we have information. From just this move here, now we have both, we have what? We have this move, and this move. And those are the things that, as traders, we're going to be using, right? So, and then you begin to see price moves again, and then now you know that, okay, good, you're in a bullish trend and all those things. Now, in inversions, as I created them for the use in MBM, right? I created two types of inversions, the bullish inversions and the bearish inversions. In fact, the bidding inversion and the asking inversions, asking and bidding. Okay? So the bidding inversions are inversions that create higher prices, and asking inversions are inversions that create lower prices. Now, an inversion, regardless what type, is made up of three major points. In fact, three major price points, not just points, not level, price. We are forgetting on what? Price. We don't care about level here. They're made up of three price levels, and each price level have its own function. Now, I do not have a note. I don't write notes for my class, and that is why I try as much as possible to be very audible while I'm teaching so that you can write your notes. If you don't write notes, and it means you can't be an MBM trader, because your mentor doesn't do any presentation. He teaches what he knows. Yeah, I have notes I've written down here, but I don't have time for all those typing and everything. Now, so I was speaking about inversion, right? I said a what kind of inversion now? Either bullish or bearish, regardless what type of inversion, right? It is any inversion whatsoever is made up of three price points, three price levels. The first one is, and so I'm going to teach you guys the three inversions level, right? Now three inversion points, yeah, good. So now the and then the three inversion price levels have each of them have their own use. They are not used the same, right? Exactly. So please follow up. Now, there are other uses for inversion. Okay, you can use inversion to identify liquidity and identify volume. You can use it to understand price direction and a lot of things. But for this class, right, I will only be teaching you guys how to use inversion to understand price direction, not for volume and all those. Those ones would not. Those ones would take a lot of talk and explanation and onboarding, which I do not want to, stress you guys with. So it's just reserved for my private mentorship. Okay, so that's just it. I'm just helping you guys. I'm not hiding anything. It's not that I'm hiding. Whatever I'm going to teach you here, just relax. It's going to make you a very profitable trader. It's just that for the sake of your learning and for the fact that this is even a what's it called now, a free class, right? You will have to make do with what I am giving to you. Hope we get ourselves now. Good. Now, you see, every time price moves from a point, so I'm going to have to delete this level. I'm going to have to delete this. Every time price moves from a point to another point, it has created a, what's it called now? A shift in volume, a shift in liquidity, and a shift in volatility. Because these three things move. You see the same way price moves, right? These three things moves. Remember that price is in fact a direct reflection of these three things, right? These three stuff, right? Can you guys hear me? Good. Now, so price is actually a reflection of these three agents: liquidity, volatility, and volume, right? So, and I've explained the way it works for you. Now, when price moves from this point to this point, these things also shifts with price. In fact, it is them that move first before price now move. You understand? So price is an indication of the three agents. Now, when I use the word three agents, just now I'm talking about liquidity, volume, and volatilities, right? Good. Now, price is a reflection of them. So anywhere price is, just know that is where there is liquidity, that is where there is volume, and it is volatility that have brought it that far. Hope you guess what I'm explaining. Now, when price goes to another point, let's say another point, maybe higher point, the same thing happened. And then it came to a lower point, still the same thing happening. Now, in MBM, we note 3 points in price. The first one is the origin. Origin, write it down, ORIGIN. The origin is usually the beginning. Remember, I've taught you guys swing. And you see that point where I call the swing glow, right? Exactly. But in MBM, we refer to it as origin because of, I will teach you guys. It's more than swing. I will teach you. I'm just referencing it so that you guys can understand. Now, the beginning of, you see, the beginning of price, wherever price started from, exactly. So you see price moving from a lower price to a higher price, wherever it started from, that is origin. So we mark this as origin. Now, price would eventually reverse, abi? Good. Now, wherever it starts reversing from, we know, we note it as climax. Now, in the case where price refuses to take out origin, or even if it takes out origin in some situation, right? The point is, after climax, what follows is prime. So I'm going to explain what I just said. So origin, and then now price came to this level, but it did not reverse. It was when it got to this level that I started reversing, right? So this becomes what? You see this point where it starts selling from, that becomes a climax. So this is from here to here is origin, from here to here is still origin. But you see this level where price starts selling from, this point here, this high here, where there is a reversal from, we call it climax in MBM. CLIMAX. X as in xylophone. And then if price refuse to go, probably, to take out this low, the origin, and started going up, right? Then we know this as climax. So those are the 3 price points in MBM. Now there is one more, but I'm going to hold on for it now so that it does not confuse you guys. But understand these 3 first. Origin starts the move. It could be a bullish move or a bearish move. But the point is, we are using bullish in this scenario. So origin starts the bullish move. Climax ends that bullish move. Prime continues the bullish move. Beginning, end, continuation. Or let me not call this one end. Let me call it pause. But basically it's end. Because price is separated. We are not saying because we don't add them together. So beginning, end, continue. Now there are rules that bind inversions, but this is a bullish inversion. So let me paint the picture of a bearish inversion. The bearish inversion is price moving from a high level, from this high point here. Price came down, and then wherever it starts reversing from, that becomes what? Climax. And then refusing to go above that origin, this level here now becomes, and then it now come down, then this level becomes what? The prime. So origin, climax, prime. In every situation, origin must be the one that is first created. Now I'm telling you the rules. Origin is the one that is first created. These are the rules that bind inversions. Origin first, followed by climax, then prime. It is in that sequence. Don't forget. Write it down. Origin, prime, and then climax. Origin, prime. Origin, climax, and prime. So origin, climax, prime. Origin, climax, prime. You guys get what I'm saying? This is basically how price moves. Now, this is how we understand price continuation. Origin, prime, origin, climax, then prime. Now, how do we now, Max, now your question you now ask is that then, does it mean that price will just continue going up like that? Price is supposed to come down, pull back again before continuing. Exactly. And this is where the second rule of inversion comes in. I will use this cell inversion for that example, right? And then you can do the homework of relating it to a bullish inversion. Now, in a bearish inversion, well, let me use just for the sake of this class, because I don't want, but basically we don't call it bearish inversion because the bearish stuff is just to, it doesn't explain what is happening. Okay, so this is ask or asking inversion. Okay, asking inversion. Now, in an asking inversion, the first thing that is created is what? Origin. And then climax. The same thing in bidding inversion. Origin first and climax. Just that the difference is that price moved from higher price to a lower price here, and from in this spot from a lower price to higher price. So we're focusing on this one now. In asking inversion, right, and askers inversion, asking askers, anyone is the same. The origin and then the climax first. Now the prime is where price continued and start continuing the sell. Now the moment origin, climax, and prime is created successfully, the next rule comes, and that is the rule of control. We call it point of control in the market business model, or price of control. In the market business model, price of control, or control price control, volume price. The point is that is the portion of price, or that is the place where most liquidities are and where most volume would come from to drive price in a certain direction. I'm teaching you guys something now. Now, I said I was only going to teach you about direction, but now I'm already teaching you guys more than that. So listen. Let me just make this brief so that it doesn't confuse you. The moment origin, climax, and prime is formed, right? You see this climax now. When I was explaining, I said the climax is the point where there is a reversal, right? But unfortunately, this climax have now, sorry, let me use another thing. Unfortunately, now this climax has been cleared by price. So price have taken out this climax, has taken it out, which does not make it a climax anymore. Let that sink in. Doesn't make it a climax anymore. Climax is the highest point of price. But now it is no longer the highest point of price. This is now the in ask inversion, climax is the lowest point of price. In bid inversion, climax is the highest point of price. So since we are selling, since this is giving us a bid inversion, an ask inversion, we're looking for the lowest point in price to be our climax and the highest point in price to be our origin. One and opposite. Then prime is the midpoint. So that is an easy way for you to understand it. Basically, that's not what it is, but that is what just for easy understanding. So in an ask inversion, origin is the highest point of price, climax is the lowest point, and then the midpoint is prime. But the moment, now this is the rule, the moment climax gets taken out, this climax here, get taken out, even if it's just small, like this, that price takes climax out. The point is that price cleared climax. Price came below climax, it is no more climax. Now it becomes prime, or what we call in MBM now, right? When we're analyzing now, it's no more the prime, right? We call it subprime, SP, right? SP, and this is where we note as our point of control, just like I was telling you guys, point of control, or what do you call it? Area of massive volume. See, when price comes to this level here, it wants to continue selling because there are so many volumes at this point. I'm going to teach you. Now, the idea is simple, that whenever price is in a sell move, right, the reversal would always go back into the previous retracement. So you see this retracement here, and then continuation. You see the reversal. Once price is reversing, it will go into that previous retracement. It can tap it. It can go deep into it. It can take it out. The point is, it came there and continue. Now, in MBM, we understand this, and then we now identify them by saying, look, whenever a climax is taken out, we have a subprime, SP. And then we have origin. Now, this previous prime, you see this previous prime now becomes an origin, not this level again. Now, this level becomes liquidity point. Others are resting at those levels. Others are there. Now, you see how I've been able to help you guys see liquidity now and volume also. And this is, man, I'm feeling guilty for revealing this, for bringing this out. Honestly, I'm really feeling guilty for it. I hope my private students would not be mad at me, but I mean, it's for the culture, it's for the community, right? No knowledge is a waste. So I just hope you guys will make very good use of this. So basically, this is now what? This is now subprime SP. This is our new origin, and then this is our climax. You can also call this POC, point of control. Okay. Exactly. Or you can call it price control, because basically it's a price level. Okay. So what we're going to be calling this level now is SP, subprime. When you see subprime, you understand that it is a point of control. So our understanding now is that price would retrace back into a subprime and continue selling. Now, sometimes price will take our subprime out, clear the origin, but still does not cancel. It might go a little bit, price might go. That's because of liquidity. There's a lot of liquidity that needs to be, grabbed and, worked on. But the point is that it still maintains that narration. Similarly, for a bullish move, we want to see origin, climax, prime, then climax taken out. See there, climax being taken out. The moment climax get taken out, we are now expecting that price would do what? Come back into, once climax is taken out, climax now becomes subprime. Price will come back into our subprime and then go clear the new climax, creating a new origin. Now, this is how, now look at this, guys. This is now origin, which is now liquidity, and this is the new origin. Now, let me explain something to you guys, and some of you feel stupid after realizing this, but it's part of learning. Even me, when I was starting out as a trader, I learned things that when I found out the truth, it made me feel very, very foolish. But I mean, come on. Nobody starts from perfection. So, guys, let me build an understanding. So if this is true, this I've explained to you is true, it means that this level now, this level now becomes what? The subprime. This level here becomes the subprime, right? So let me imagine that price didn't clear this level, right? So this becomes the subprime, and then price went down into our subprime and take out, this level because of massive liquidity, continued, and then this is our subprime, and then continue like that. Now, when we started learning MBM, I said I was going to reveal a lot of things for you, and this is one of it. Look at this. So those of you who trade trend line, now look at this is basically how your trend line is formed. Now you'll be expecting one touch, two touch. Unfortunately, price takes you out. Price takes you out. Not that you were wrong, but you don't understand the reason behind price. See how we have explained how trend line are created. This is how trend line is being created. That trend line you are drawing and you think is what control price. It's not it. It is MBM. It is MBM that helps you understand price. Through inversion, it is inversion that teaches you. It shows them to you. It is price. Nothing controls price. Price moves on its own. But when you understand the underlying narrative, the three agents, right? When you understand the three agents, that's what I'm going to call them. TTA. Yeah, that's what I'm going to call them. This is my model, right? And some of these names are just for us to, basically, honestly, I don't like trying to sound very smart. So I just try to explain things and then you understand it. But we're going to call it TTA. When we call it TTA, the three agents, we're talking about liquidity, volume, and volatility. That is what moves price. That is what you're seeing here. Okay? And so when price clears a high, let's say, for example, price clears. Now, most of you who have been trading based on what I've taught you guys, right? You know, I told you I will teach you continuation, and now this is it. When price clears, let's say, a candle high, a candle low rather, and you are expecting price to buy. This is the reason why price would buy. You are expecting price to sell. This is the reason why price would sell truthfully. It will sell. Volume gets transferred, but it will not continue in your direction for long. It will just take you out and then start selling. This here is the reason. I'm revealing a lot of things to you guys. If you don't pay attention in this class and you miss it, it's on you. In fact, let me stop here and let's go to the chart before we continue. I want to show you guys something. So I'm going to delete this. Just want to show you guys what I've just taught you now. So let's look at price. I'm on the daily time frame. We just want to look at price based on what I've taught you guys just now. So we'll use both sell side and buy side inversion as reference, right? So now we'll still talk about how the precision, because we'll focus on precision too. Here, I just want to show you guys something. So basically, price started selling, and then there was a little reversal here, right? So we have origin, climax, and then prime, because this is where price started selling from. Now, this level here now become our subprime, and since price sold, we expect price to come into our subprime. So you see this old sell here. Before this bullish candle formed, this old sell, we already knew that price was coming to retest our subprime. And look at that magic there. You know why I love MBM? It is so precise. And I'm going to teach you guys how to refine your trade entries. I want to show you guys something. The precision in the market business model. Okay, now look at this. This is the climax, right? And the price broke the climax, so we definitely expected that by the time you see this down candle, we know that price would come up here. So we were right. Price came up into our subprime, and what happened? Started selling. But where in that subprime the price started reversing from? Notice now look at this high, the high of this candle. See this candle's high? I'm sorry. The open, because it's a bearish candle, right? The open of this candle, see how price touched it. I want you guys to see that, right? So price touched that level. And now, if it is true that price, whenever price clears, comes back into a subprime, where do you think it will go next? Definitely the new climax. And that new climax is here, below here. So when price this level here, right? So when price came to the subprime, right? When it came to the subprime, directional wise, we know that price is coming where? To this level here, to this down. That's what happened. Price came down. Now look at this. So we and price came down, right? And it has come down now, cleared the climax. That climax now become what? Subprime. That's what happened. See price clearing that subprime here, going back into it with this candle, selling, and then the same thing happened here. See price clearing. This is origin. Okay, this is origin, and then prime is here. These are prime here, rather. This low here. And then when price came down, we know it was coming back into that subprime. It's now a subprime, no more prime. Price touched it and then went up a little bit, but it started selling. For some of you, you would think this is a continuation. But because of the trade MBM now, you know that this is just a correction that would eventually continue. Now, notice how price just started, price was just moving in a direction. Look at this high here, this low here, which is a subprime. See that level there? See how price broke it, came back into it as subprime, making that high our origin, and this low our climax, and then price delivered into the climax. And you keep on doing that until now let's look for a buy situation. Right, so we'll use this. I think this one is not proper, but I'm gonna use it because MBM works for everything. Right, so now when from this low here, see price went up, right? So in fact, let me draw it for you guys. Let me draw it out. You see from this low here, the price went up, then created a low here, then went up, did another low, then went up, came into a subprime here, and then continue going up. Then just continue. Now sometimes it's gonna take out your subprime. We're gonna teach you. I'm going to teach you all those ones. I think this one is a little bit complex. We'll get to that portion, right? Trading, complex inversions where you see double inversion, and that is where you're going to be hedging. Hedging is when you trade so that you don't lose. You lose one, and then the other one compensates you for the loss you made on it. Now let's look at this one. So we have a low here, which is origin, and we have what? Prime. These are prime. These are prime here. I'm sorry, climax. So these are climax. These are climax here. Then prime. Then price broke climax. When it broke climax, what happened? Came into prime. This candle brought it into prime. Continued, and and then to that high, and then okay, I think here now it gave us a change in direction here, right? So at the end of the day, just for the sake of teaching you guys, right? For the sake of teaching you, hold on, let me show you something. I want to show you guys something. Good. Now you will notice here now that price started giving us, a ask inversion. Meanwhile, we were on bid inversion, right? Exactly. So expect price to, change like that. Most in, its price. It's gonna do what it's gonna do. So here now you see price came down, and then this become origin, climax, prime, And then price broke climax. As it broke climax here, what do you think will happen? It went back into the climax. I'm sorry, it broke climax. Climax became subprime. Went back into subprime and started selling, right? So and then it changed direction here again and continued. So that is basically what always happen in price. My advice is that you guys replay these videos and watch it as many times as possible to get the lessons I'm teaching you guys, and then you practice it on your own also. Now, of course, this is the first class where I'm just teaching you guys inversion. Of course, you don't expect that you are going to understand it in the first class. This is introduction to inversion. We have been doing introduction to inversion all this while, but this is proper. Like now we have seated on inversion. I hope you get what I'm saying. We are seated on it now. So don't expect that you're going to understand it. But of course, guys, I understand the challenges you're going to have. So what I'm going to advise you to do is watch this video as many times as possible as you can. Try to understand what I've taught you guys in this inversion. Okay, so that in the next class, I will still talk more about inversion and I will, show you guys more about it. But I think this is already up to 1 hour, and you know what happens if our class exceeds. Our class is not supposed to exceed 1 hour. I'm being cautious of, YouTube policies, and also I'm considering you guys also. So let's just put a stop to it today. I do not want to stop today, but this is the benefit of, one-on-one stuff, teachings or class. And then you don't have to stop or have any timer. But then it's what we have. This is our reality. So we just make do with what we have, okay? For those of you who would like to, what's it called now? I spoke about learning how to trade, especially, right? You can follow me on Twitter, right? Exactly. And some of you have been messaging me. I've been seeing your messages, but I just can't respond to all of you right now. And some of the questions you are asking are deep questions that I honestly can't reveal, right? Even to join my private mentorship, you must sign an NDA. Yeah, okay, so because what I know about this market, what I have about this market, I just can't allow it to be out there in the public, except the one that I wish to be. I want it to be out because of, it's knowledge that most of you can use. So that's all for tonight, guys. Thank you so much for being patient, and we'll meet in our next class. In our next class, we'll be going deeper into inversions. Okay. Do have a wonderful night rest, and make sure you back test and you practice and you wash and you write your notes. Okay. Very important. Bye bye, guys.